We're live at this time.
You're good? Okay. All right, good afternoon, everyone. My name is Rick Beaudoin from the Capital Markets Desk at Antares Capital. On behalf of Antares Capital, Macquarie, and SunTrust, the JLAs for the transaction, welcome to the lender meeting for what we're going to call Super Moose for now. We don't have a name of the company just yet, but we will get to that. We will get to that pretty soon. We're once again excited to partner with two of the best software investors, Bain and Vista. Today we're also joined by the management team of Superion. To my immediate left is Simon Angove, the CEO. Simon is the existing CEO of Superion and will continue in that role for the combined entity. Also in the room is Brad Serminski, the CFO, to Simon's left. Brad is also the current CFO of Superion and will continue in that capacity for the combined company. From Bain Capital, we have Darren Abramson, MD on the private equity side. And we also have John Kilgallen there in the corner. Sorry to call you out, John, but John from the Capital Markets Desk at Bain Capital. Also up front at the far end is Kevin Sofield, Head of Capital Markets for Vista Equity Partners. A few housekeeping items. This is a public-only presentation. We'll review projections at the end, so any projection-related questions, please hold off. I'll let you guys read this confidentiality statement when you get back to your office. But starting out, this transaction combines three businesses, Superion, Tritech, and then a small piece of the existing Aptian business. That business being carved out of Aptian is their public sector business. We'll come back to that in a second. But the combination of these three businesses creates the leader in public safety, public administration software platforms. And you'll hear a lot more about that today when Simon gets up here. Tritech today is a Bain-owned asset. The Tritech was sold to Bain on June 22nd of this year with the intention that the Tritech would merge into Superion and this small piece of Aptian that I was talking about. Superion is an asset also in the public safety and public administration sector, owned by Vista since January of 17, and Vista also owns Aptian, which dates back to 2012. This is a pretty unique opportunity in the combination. This is going to create the leader in this space. When we think about public safety and public administration software, it's a compelling combination for a number of reasons that you'll hear today, but I will not steal Simon's thunder. Simon and Brad can cover that for you. From a lender perspective, I mean, this credit's pretty unique with really two attributes. It's the customer and the end market. When you think about the customers here, we have highly diversified, over 7,600 customers under contract. It's recurring revenue. These are really, really long replacement cycles, generally 10 to 15 years. And our average tenure with customers is sort of that same 10 to 15 years. It's a pretty incredible, sticky customer. I'm going to quote Simon, who says often, yeah, it's pretty hard to lose these customers at the end of the day. And you'll see a lot of that today. The other interesting attribute here, too, is just the end markets. Municipalities, this is kind of deeply embedded stuff, mission-critical stuff. When you start talking about jailhouse systems, 9/11 systems, people tend not to want to replace this once you get it embedded in their municipality. In terms of the credit facilities, $125 million revolving credit facility. There's an $895 million first lien term loan and a $380 million second lien term loan. We'll point out the second lien's already been privately placed. We'll cover those terms in a second. Net leverage here to start off the June 30th numbers is a 5 by 7.1 deal. In terms of the sources and uses, I just told you what was on the left-hand side for sources. Sponsor equity, $955 million. A significant equity check from Vista and Bain. That represents 43% of the overall capitalization. The economic split between Bain and Vista is 50-50. You can see the purchase prices of the three entities that are coming together. The other thing I would just point out for everyone down below, we've shown you the March 31 numbers with a roll forward to June 30, and you'll hear a lot about the momentum in the business, but picking up $5 million of EBITDA as we roll forward. In terms of the ratings, we have ratings from S&P, B- stable. Moody's is expected later this week. I would expect and assume a low single B profile. In terms of terms and conditions of the first lien, I'll just get through this quickly. 7-year first lien deal, $895 million, standard amortization and mandatory prepayments, call protection 101 for 6 months. It is covenant light. Second lien, $380 million. That is priced at L750. That will not change. That deal is done and sold. 102, 101 hard call. And obviously no financial covenants either. In terms of the corporate structure, just quickly, Super Moose Borrower LLC is our borrower. We've captured the guarantors here, so the lenders benefit from a full guarantor package. In terms of timing, launching today, we expect commitments back from lenders on August 10th. We'll look to close this by August 17th. Again, I will say the second lien privately placed, and we've had tremendous take-up through some early marketing meetings on the first lien as well. So with that, I'm going to turn it over to Darren for a few comments on Bain Capital.
Thanks, Rick. Do the clicker, you want me to come up?
No, go ahead. I'll do it right from here. I'll do it for you.
Thanks, everyone, for joining. Thanks, Rick. As you mentioned, my name is Darren Abramson. I'm a managing director at Bain Capital. Been with the firm 13 years and co-head all of our technology investing on the private equity side. I won't spend a lot of time on Bain. I think most of you know us, but today we're managing about $95 billion in capital across the platform globally. We're investing out of our 12th family of private equity funds, which is close to $20 billion on a global basis, about half of that in our dedicated North America fund that will be making this investment. And, you know, strategically orientated around finding opportunities where we can back or build great management teams to help transform businesses by market-leading companies in attractive growing markets where we see an opportunity to bring not just capital but strategic and operating expertise and resources to bear to help accelerate growth and create value that way. And we've been doing that for 35-ish years quite successfully, and a lot of that in technology. About a third of our activity dating back to the 1980s has been in and around the TMT space. Over the last decade, almost all of that in software, and so, you know, ranging from things on the infrastructure and security side like BMC and Blue Coat and Symantec to a lot of vertical software, Applied Systems and Vertafore and Viewpoint and others around the world. And so built a set of capabilities around technology in particular, and, you know, spend our lives looking for assets like this, so we're particularly excited to be here. One of the things we've really doubled down on, which you can see on the next slide, is really around scale, M&A, and transformation as a way to drive value. And so actually in our most recent fund, our 11th fund in North America, almost half of the investments we made had as a core part of their thesis and value creation plan very large-scale transformative M&A, often lined up at the time of the acquisition itself, as in this case, sometimes shortly after the acquisition. But we've built a set of capabilities and resources around integration planning, synergy capture, how to manage all of the complexities that inevitably arise in these types of large transformative acquisitions without harming the customer, without impacting top-line growth, while getting all the cost synergies. And you can see on the right-hand side, I won't go through all of these, but a very consistent track record throughout all of these of meeting or exceeding our underwriting targets on a cost basis, and frankly creating much more valuable, well-run companies as a result, with better scale, market-leading positions, and this is exactly what's attracted us to this opportunity that we'll talk about in a minute. And the last thing I'd say is we've spent a lot of time over the years with the Vista folks. We're very like-minded in terms of how we think about transforming companies and building great software businesses. We've obviously partnered very effectively on Vertafore in particular, but looked at another number of opportunities, and this deal has been a long time in the making, and so there's a very high degree of alignment around the plan and working with Simon and the team to really flesh out exactly how these things come together. And so I'd say an unusually high level of conviction in terms of the synergy numbers and the combination of the value that's going to create and how we're going to go about executing that with the Vista guys. So with that, I'll turn it over to Kevin to talk about Vista a little bit.
Yeah, thanks a lot, Darren. And first of all, thank you for all of you that have made the long trek over from the St. Regis at the NAVEX Bank meeting this morning. We appreciate you doing the doubleheader. And I guess for those of you that are upset with your allocation on Eagle View that you get this afternoon, I would suggest you put in a bigger order for this deal. So for this overview, on slide 14, you're familiar with the right-hand side of the page, lists the attributes of the companies that we invest in, and you won't be surprised when you see and hear in Darren's remarks around the investment thesis, and then later on from the company around the credit highlights. This company has all of the things that you see on the right-hand side of the page, and we included a couple of logos in the bottom part of the page in case you weren't familiar with what we do. On the next page, similar to Bain, we focus a lot on cost savings and optimizing the performance within our portfolio companies. We do that through a set of best practices, which we uniquely call the Vista Best Practices. And so we are excited about this opportunity in